Hey everybody, Doug Mims with Keller Williams, Dallas Preston Road, coming to you once again live from the 121 Business Center. So today is October 5th, one of the favorite days for our counties here in Texas. This week is the beginning of county tax statements going out so that everybody can pay their taxes and make our counties rich. So I wanted to take a minute to talk to you today about a couple of points. First of all, if you're a homeowner in Texas, you're going to get a tax bill probably within the next 30 days at least, possibly even sooner. I know I just looked and my tax bill was mailed today, so I assume if the post office is diligent, as we hope they will be, it'll be in my mailbox sometime this weekend or Monday. But know first of all, most importantly, that if you receive a tax bill and you have a mortgage and you have an escrow account, that your mortgage company will also receive the same tax bill and will pay that tax bill at their leisure automatically for you without you having to do anything with it. So know that it's going to be taken care of. I usually kind of take a check of my escrow account just to make sure that that bill has actually gone out. And just because it's out of your account doesn't mean it's actually been sent to the county, but it will be forthcoming. They can pay at any time between now and January 31st, I believe. So it can be taken out of your account now, but then not actually sent until they do a bulk send to the county, maybe later on in the year or even the beginning of next year. But anyway, just know that if you have an escrow account, the bill is only for your information file in your records, and if you are so inclined, and know that you don't have to worry about doing anything. If in fact you don't have a mortgage, then now is the time when you need to start figuring out how you're going to get that payment made. For those of you who are over 65, there are a couple of things you need to know about. Number one, the counties in Texas allow you to make your payments in 4 equal payments throughout the year. You can't start that on the fly. In other words, if you haven't got that set up already in the middle of the year, you can't all of a sudden start making payments into it and think that that's going to work. You have to file a form that will be available on your county website. You may have to do a little searching for it because every website is different, every county is different. But there will be a form, possibly even an affidavit to file, stating that you'd like to make your tax payments in 4 equal payments throughout the year, and you'll have deadlines set up, and those will be given to you by the county. Don't miss those deadlines or you accrue interest and penalties. But know that if you're over 65, you are allowed to do the 4 equal payments. If you're not over 65, you're out of luck. It's one payment and one payment only, and if you don't have an escrow account, you've got to make that payment. One other thing you need to know about if you're over 65 is that in Texas, you are allowed to defer taxes on your homestead. In other words, the home you own, live in, and claim as your main homestead. You are allowed to defer taxes on that property indefinitely by filing an affidavit with the county. And again, that'll be available on your county website. So go out there, find your website, and do a little searching around, and you can find it. If you can't find it on the website, give your county tax assessor a call, and they will be able to provide you with the affidavit you need to fill out to do this. However, be forewarned that if you defer your taxes, know that those taxes are due within, I believe it's 188 days of the sale of your property. So if you have your taxes deferred and you sell your property for any reason, it may be part of your estate, that those taxes are due to be paid to the county within 188 days of that sale. Also know that there is interest assessed on that tax deferment. So every year your taxes are put into a deferred account basically, and there's an 8% interest assessment added to that yearly. So the taxes do get kind of high that way, but if you're strapped on a fixed income, having difficulty affording the taxes, it's an option that would be possibly better for you than losing your house or being forced to move to a less expensive place. Because as we all know, property anywhere in the Metroplex right now is not inexpensive, and it's difficult to find things that are affordable for those who are on fixed incomes. So if you have any questions, give me a call, 214-533-9151. Go out to my website, www.dougmims.com, and let me know what you need. I'm here to help. Thank you.